Ladies and gentlemen, welcome back to the channel. Tesla stock today coming under a little bit of pressure. The stock down about 1.2%. Nothing we haven't seen before. But this is the start of the Santa Claus rally. So what's going on? What do you need to know? In today's episode, we're going to cover what's happening in markets and your Tesla stock breaking news, in which there's actually some news for Tesla that is impactful, that the stock is not quite reacting to, but should over the coming days. So we have a lot to get into in today's episode. Keep in mind, today is a short day of trading, so this video is coming out at 1 p.m. Eastern Standard Time tonight. Hit that like button as well as subscribe to the channel if you guys have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community and come invest alongside us. There's a lot of opportunities out there. Tesla is just one of them, and we are seizing the others. That link is down below, but let's begin. Now, before we go over what's happening in the markets today, why Tesla's coming under a little bit of pressure, let's go over your Tesla stock news. And look at this. Tesla spotted doing robotaxi validation testing near Fredonia, New York, in preparation for future service expansion. I need you all to understand this. Tesla is doing this, mapping, if you will, getting areas ready for robotaxi long before you know about it. This is happening all over the place in random places like Fredonia. I've never heard of it before, okay? This is going on in major cities. This is going on in secondary cities. It's happening everywhere. The real question will be next year, how fast do you get regulatory approvals? And it's one of those things where you might start to get, boom, new city, new city, new city, new city quickly, and then nothing for a while. New city, new city, new city. And these are going to be the catalyst that move Tesla. So I'm surprised with stuff like this being seen out there. Tesla stock is not more reactive to it at this stage, because this is, if they're spotted in Fredonia, you could presumably say that they're testing in many more cities. To go alongside that, Tesla has introduced an updated robotaxi website, a clear sign that expansion is coming soon. They say, quote, "We're bringing autonomous rides to you today, starting with the Model Y. Autonomous robotaxi rides are currently being offered in Austin, Texas. To get started, download the robotaxi app. Cybercab, our purpose-built, fully autonomous vehicle, will offer rides in your area in the near future. We are building an autonomous future that is accessible to all people. Our robotaxi vehicles are designed to support various accessibility needs, including space for service animals and room to store some wheelchairs and other assistive devices. The Tesla app is currently available in 29 languages, with more being added." Tesla has also introduced cleaning fees for their robotaxis. $50 will be charged for moderate messes, such as food spills, significant dirt, and minor stains. $150 is charged for severe messes, such as bio-waste or smoking in the vehicle. Tesla says, quote, "We prioritize maintaining a clean and comfortable environment for all riders and prompting responsible rider behavior. To address incidents where vehicles require additional cleaning after a trip, we will assess the type and severity of the mess and apply the appropriate fee. Once a fee is assessed, you'll receive an email notifying you that additional cleaning was required for your vehicle after your trip. An updated ride receipt will also be available under the ride history section of the robotaxi app. If you believe a charge was made in error, call customer support team and follow the prompts for option 7. Tesla, on their official Tesla X account, says, "Merry Optimus. Thank you for your owners and employees and supporters. You rock." Elon Musk, in a kind of surprising tweet here, says that Andrej Karpathy, he worked at Tesla for a long time, and there's been some people that have said, hey, look, we should get Andrej back. Elon Musk responds and says Andrej's understanding is dated at this point. Tesla AI software has advanced vastly beyond what it was when he left. The intelligence density per gigabyte of Tesla AI is at least an order of magnitude better than anything else out there. Waymo today has just released an official statement following the massive power outage in San Francisco this week and the robotaxis shutting down. Keep in mind, Waymo shut down during this power outage. Waymos are designed to be able to operate if the power goes down, but the problem is the cameras, the LiDAR, the radar was sending too many mixed signals and basically shut the vehicles down. So are they designed to operate during these stressful conditions? You could argue probably not, but that's kind of the explanation we got. Now, Waymo says, we want to share an account of our operations during the outage and how we are evolving to better serve the city. Navigating an event of this magnitude presented a unique challenge for autonomous technology. While the Waymo driver is designed to handle dark traffic signals as four-way stops, it may occasionally request a confirmation check to ensure it makes the safest choice. While we successfully traversed more than 7,000 dark signals on Saturday, the outage created a concentrated spike in these requests. This created a backlog that in some cases led to response delays, contributing to congestion on already overwhelmed streets. We established these confirmation protocols out of an abundance of caution during our early deployment, and we are now refining them to match our current scale. While the strategy was effective during smaller outages, we are now implementing fleet-wide updates that provide the driver with specific power outage context, allowing it to navigate more decisively. As the outage persisted and city officials urged residents to stay off the streets to prioritize first responders, we temporarily paused our service in the area. We directed our fleet to pull over and park appropriately so we could return vehicles to our depots in waves. This ensured we did not further add to the congestion or obstruct emergency vehicles during the peak of the recovery effort. And they go on about, the future and what they're going to do better. Long story short, they failed and Tesla succeeded. Sawyer Merritt says that he just received FSD v14.2.2.1, which is just a lot of points at this point. And he says that he got FSD v14.2.2 last night. So in 24 hours, he got a new update. And in all fairness, it does seem like Sawyer Merritt gets these updates before most other people do. So we'll see if there's any notable changes. Also in the news today, the Cybertruck has received FSD V14 in South Korea. This is the first time Cybertruck owners in Korea have gotten FSD, so that's pretty cool. Now keep in mind, today is a short day. Markets close at 1 p.m. Eastern Standard Time. So again, during the holiday season, not to mention a half day, there's a lot less activity in markets. And same is true today with the options activity from hedge funds and institutions. You have 67 different trades totaling $26.08 million with a positive order value of 82%. So it's very positive, but only $26 million worth is basically nothing for Tesla. Now, short sellers today are covering about 92,000 shares, and it seems like every day now there's 100,000, 200, 300,000 shares being covered. It hasn't been reflected in the short interest. I would expect to see a little bit of a short interest decline from about 3.3%. Wouldn't surprise me if we're closer to about 3.1 or 3.05% in a new updated short interest report that we will get in a couple of days. But currently there's 78.3 million shares sold short in Tesla. And, once you get above $500 per share, that's where the pressure gets put on the shorts, right? That's the big battleground resistance level at this point. After Tesla's stock hit $498.83, it was rejected and has kind of traded sideways, almost came down a little bit in the last couple of days, but still sitting near your highs. I think Tesla's going to be a 500 plus, close to $550 stock by the time the Santa Claus rally is over with. And a lot of that move could come pretty rapidly once you get above $500 per share. Because, again, you have 78 million shares that are sold short. institutions are largely not in the office right now. Retail investors tend to be very bullish on a stock like Tesla. And with a low volume kind of rally, wouldn't surprise me to get a pretty aggressive move to the upside. Not to mention all of the other countless reasons to be bullish for next year adds to, the potential rally, because I mean, if you're going to be long any AI stock next year, Tesla seems like a top contender, if not the top contender. Now, if we take a look at the heat map today, it really does look like a mixed bag out there, just across the board. Look at how much like light red you have here, or dark red maybe I should say you have here, like this almost purple looking color just everywhere. Light green scattered throughout here, red scattered throughout here. It's not a clear cut day today. Industrials having a little bit better of a day versus the index. Consumer defensives a little bit better. Banks a little bit better. Software, again, mixed bag. Technology, bit of a mixed bag as well. There's not a whole lot of a rhyme or a reason to this market today. And if we take a look at the headline indexes, the Dow is up 0.43%, so it is the outperformer, which looking at the heat map, that makes sense with industrials and healthcare outperforming a bit. S&P is up 0.2%, NASDAQ up 0.03%, Russell 2000 up 0.12%. The VIX, look at that, down another 3%. When the VIX is hitting these 52-week lows, a new 52-week low today, that tends to bode well for risk assets in the days and weeks to come. When volatility is low, when fear is low, you do tend to see risk on stocks do well. And that would be suggestive of, again, hey, look, we're going to have a Santa Claus rally. That's my personal opinion. Now, the Santa Claus rally officially began today and will last over the next 6 trading days. Technically, that's the defined Santa Claus rally going ahead. Okay, so well into next week. Okay, the S&P since 1950 has an average gain of about 1.3% and positive returns 76 to 80% of the time, significantly higher than other random 7-day periods. And I've talked about precisely why we're going to have a Santa Claus rally. I think the setup is, again, from a tactical perspective, that's one thing. Hedge funds, institutions, window dressing, trying to raise performance in the last couple of days of the year to report better numbers for their clients, right? That's always a good thing. Like for a fund, if you're underperforming the S&P, you're trying to catch up right now. Right, it's the last couple days to catch up. Santa Claus rally tends to be very, bullish. You're trying to catch up here, okay? But the bigger picture, the larger kind of reason I believe you could have a Santa Claus rally and a strong January is the very strong setup that we have for next year. AI is alive and well. Investment, adoption, application, just never better. I think that's fair to say. Consumers going to get better. Big, beautiful bill. No tax on tips. No tax on overtime. Being able to write off auto loan interest and changes in depreciation at companies, meaning they can go out and invest more. Even the cutting red tape for AI, creating the one rule around AI, which should be coming out according to the administration in the first month of 2026. That should allow for more investment, right? The last thing you want to do as a company is invest in, AI this or AI that, and come to find out you're breaking a rule or something, and then it's wasted money. So all of those things, great. If real estate picks up, like I think it will next year, that's great. Multiple Fed rate cuts, new bullish Fed chair, trade certainty versus 2025. It would be hard to believe we would have more trade uncertainty in 2026 than 2025. Yeah, there's a lot of people that talk about the USMCA, the United States, Mexico, Canada trade agreement. If that were to be revised or totally renegotiated, that would potentially spark some volatility in the first half of 2026. There's talk about another government shutdown. If things like that happen, then of course, you're going to have some issues next year. But I think the bigger picture is the markets are doing well. There's not a whole lot that's going to make companies miss earnings next year. Earnings are going to grow. AI is going to grow. And that's ultimately what dictates stocks. So I think even deeper than a tactical rally is this really good setup for next year. And if you're under positioned in stocks, I don't think 2026 is the year you want to be under positioned with that kind of a setup. Now, bond yields today, 10-year Treasury yields are actually down about 1.5 basis points or so, down to about 4.15%. But they've been pretty stable now for a while. So that's actually leading to the VIX declining partially because of how stable bond yields have been. There's not a lot of volatility there, and Wall Street likes that, right? Risk assets tend to like that. Now, we didn't get much for economic data today, but we did get initial jobless claims that came in at 214,000. The expectation was around 223 to 226,000. So you did come in lower than expected. Same with the GDP data yesterday. Came in better than expected. You have seen the rate cut for 2026, the first one. It was originally in March. Well, it was originally in July before the last Fed meeting. After the last Fed meeting, markets started pricing in the first Fed cut. In March, you can now see you are no longer pricing in a cut in March. The probability of a pause is 54.1%. The probability of a rate cut March 18th is about 40%, 39.9%. For April, you are pricing in a rate cut, 43.0% chance of a rate cut, 42.5% chance of a pause. So markets are split on whether or not April is going to be the first rate cut of 2026 versus June. June is decisively pricing in a rate cut, 42.7% chance of a rate cut, only a 20% pause or chance that we pause through June. There's actually a 29.1% chance of 2 rate cuts by June. So there's a better probability of 2 rate cuts by June than no cuts by June. So at this point, you're pricing in that cut definitively in June. April is really, really close. But again, a week ago, you were pricing in a cut March 18th. So, that has been some of the pressure in risk assets in the last 2 days or so. The percent of stocks trading above their 50-day moving average coming in at 57.22%. Not really moving around too much today, as I've talked about before. You're kind of at a midpoint of where we have been over the past 5 years. Historically, there's room for strength here. There's room for it to get worse. It's not telling you a whole lot. The AI Investor Sentiment Survey, we've covered that quite a bit over the last couple of weeks. It's remained pretty stable at about 44% bull, 22.7% neutral, and 33.2% bear. The bear percentage is actually up about 2.5% from last week, but again, the bull percentage has been in the 44% range for 3 weeks now. So there's not even a whole lot of volatility in sentiment out there in markets. Now, CNN Fear and Greed Index coming in at 59 today, same as yesterday in the low end of greed. Market momentum is greed, stock price strength is greed, stock price breadth is fear, put and call options, extreme fear, market volatility is neutral, safe haven demand, extreme greed, junk bond demand in extreme greed as well. Now again, for Tesla stock today, stock's down about 1.2%. I would have thought the stock would have reacted positively to some of the headlines that we have shared today. I think the first day being read of a Santa Claus rally is not super shocking, especially it's a half day, and we'll see where things shake out by the end of this half day of trading today. But, green Santa Claus rally or not, I'm still expecting to have a strong Santa Claus rally. We don't have any major catalyst really into the end of this year. We don't really have any earnings. So it could be a headline driven thing. If we get any weird or scary headlines, markets are going to respond to that. As long as we don't, you should have a Santa Claus rally here from a tactical setup. Now, you should have a very strong 2026 from a fundamental setup, as we've talked about on this channel before. AI and big beautiful bill, consumer strengthening, inflation falling, couple of Fed rate cuts, new bullish Fed chairs, so on and so forth. Where, really, as a long-term investor in Tesla, I don't really care much about a Santa Claus rally. It would be good to actually see my target hit of around 550 to get into the 500s for the first time ever. That would be a really cool, quote-unquote, Christmas present. But or after Christmas present, we'll see. But it wouldn't change anything for the outlook for next year. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you guys have not done so already. Come join the link down below in the description of today's episode to come join the trading community as well. Have a great rest of your day, and I will see you in the next one.